other individual players in the game as well, or
Right.
like investors who must have invested in bulk. I think checking on like all those details also kind of come in handy while deciding which opportunity to, I think, go
Absolutely.
for.
Absolutely. Any
So
number of checks that you can do, which helps to build more trust and confidence, right? 100% you need to do all of that.
definitely, definitely. And like from a perspective of an investor, if I were to ask you, how important is seniority? Like
Right.
how important is the exit strategy clearance during the start of conversation for an investment?
Right.
What would you rate? How important is it?
Right. So, I might be repeating this, but as I said, right, have goals, have milestones, right? Because let's say if I'm low on liquidity and I'm going to invest whatever liquid funds I have in a particular project which has a lock-in of 1 year or 3 years, right? I don't want to be in a situation where, I need to really pull some strings or I need to, do something which might not be in my control to liquidate my investment, right? So having an exit strategy and aligning that exit strategy to some of your short or medium term goals, right? That might really help you to be better prepared as well.
Correct. And I also feel like with seniority, like these days,
Yeah,
especially with the working class, they don't want to wait till 10 years for something to
true,
mature, or they
true,
don't want to do like, I don't think a lot of youngsters have that mindset that they have to save that much money for their, let's say,
right,
children's marriage and things like that, which might have
right,
been there for like the earlier investors for sure.
right.
So I feel like having a clear exit strategy
Yeah,
during your initial conversation,
yeah,
and let's say if they have a particular date in mind, it also gives them kind of like a security or a peacefulness,
true,
so that they don't have to be anxious about their
true.
investment at all.
True, true, absolutely, absolutely. So yeah, like if you're planning for some of your short or medium term goals, right? I think this might be a very good fit, right? Because one of the things with when it comes to constructing a portfolio, right? Especially when it comes towards investing in equity, mutual funds or equity shares, right? We always tell
Correct.
individuals that you have to be invested for slightly a longer duration, right? Because
Correct.
markets are quite volatile in the short term. So if you want to see good returns, right, you need to be invested at least for a minimum period of 5 to 7 years, right? For those
Correct.
who don't necessarily want to wait for 5 to 7 years to accomplish a particular goal, right? Then this particular asset class fits in well, right? I'm not just talking about AGI. They can probably consider other options as well, other fixed income securities as well, which come with a slightly lesser tenure, which allows them to withdraw money or to get a good cash flow on a regular basis.
Agree. And since we are on the topic of,
Hmm.
let's say you just mentioned that, the markets have been volatile.
Right,
So, in your opinion,
right,
and since you have been working and, you have way better knowledge about equity,
yeah,
stocks, mutual funds.
right,
So, compared to last year,
yeah,
how do you think the market is going to react this year?
right. So honestly, predicting the future is something that we shouldn't be doing, right? Those things are not in one's control. So thinking about that is just wasting more time and energy, right? So I'll just give you some examples, right, of some of the macro events. So we've seen RBI rate cuts. We've seen 4 to 5 of them. We've seen the Fed rate cut. We've seen GST 2.0, which has come. We've also seen good inflation numbers, as in on paper, we are doing very well in terms of inflation. Again, when we look at the
Correct.
Q2 results, we are doing very well. The GDP growth forecast for the coming years also looking very good, right? So I've named at
Correct.
least six macro events, right? After all of this, the market has still not given a very good, run up, right? What we would have expected, right? So it's very difficult, with all these positive news, you can only hope that 2026 is a better year compared to 2025, right? But as they say, market rewards only the ones who are patient, right? So when it
True.
really tests your patience, right, that means that you will get rewarded, right? If not 2026, probably in 27 or 28, right? And it's very normal, right? You're not going to the period of 2021 to 2024. We were not in a bull run, we were in a super bull run, right? So most
Correct.
people who entered post-COVID, right, and saw very good returns until 2024, were with the view that this will continue to go on for 1, 2, 3 more years, or might continue to be just like this, for eternity. But then we had a reality check wherein we saw a correction year come through, right? And if
Correct.
you go back and see the track record for the last 30, 40 years, this is a very normal thing that can happen, right? So people
True.
need to kind of understand that this is reality. This is very normal. So to expect anything in 2026, right? Obviously we are wanting that, we see good growth in this particular year, but your
Correct.
expectations need to be realistic. You cannot, have unrealistic expectations at this point in time,
Agreed. And like like you said, that market tends to be really volatile, right?
right?
So I think a lot of investors these days want
Yeah,
something that's probably, on the lines of, let's say, fixed returns,
fixed
or like a
returns. True,
stable income, stable monthly income if they could get out of that opportunity.
true.
So what do you feel about like how important is structure of an investment when it
Yeah,
comes to investors' confidence? And it
yeah,
also, let's say it also saves a lot of time because you don't go to and fro like in deciding, what
true.
opportunity you want to do. So how
Yeah,
important is structure opportunity like
yeah.
as per you?
Right. So I think over here I like to use the word diversification, right? So what people think diversification is basically investing is investing in every place, investing in gold, investing in equity, investing in let's say FDs, or or taking a few insurance policies, right? They feel that is
Correct.
diversification, right? But unfortunately, with that comes the right asset allocation as well. Right. So we were
Correct.
talking about, how the market performed from 2021 to 2024, right? And then we spoke about how 2025 was as well. So I remember having this conversation with some of my clients saying that, we've made good money. Let's book some
Mm-hmm.
profits and let's park this money in a stable or in a fixed income security,
Correct.
right? Because if let's say by 2024 September, if they were seeing 23% XIRR, right? I was telling that we've made good returns, but it's not necessary that we will continue to see the same growth in the coming years as well, right? So when you
Correct.
invest in a fixed income product, right, a portion of your investment, not necessarily it has to be as part of booking profits. This is just an example that I'm taking, right? That they made
Agreed.
good profits and it was time for them to diversify. You can always put in fresh investment as well. But point is that when you invest, sorry, when you invest a small portion of your money in a
Mm-hmm.
fixed income or a stable income, right? What happens is that you know that that particular asset class is always going to be in the green, right? When
Correct.
there's volatility in the short term, right? You will see a lot of fluctuation. You might also see some of your stocks in the red, right? Or you
Correct.
might see a lot of losses. But over here, you will always be in the green. So there will be some peace of mind. And we say hedge over here as well. But you can also hedge your portfolio when you know that you're going to make X number of return, X percentage of return from this particular
Mm-hmm.
asset class. So having a structured product or having a fixed income product such as a commercial product, right? Commercial real estate product might really help you elevate your portfolio
Agreed. And what do you say about like the structured real estate
structure. Yeah,
investments as compared to, let's say, mutual funds or
right.
SIPs? Like, how do you compare both of these?
Right. So again, when it comes to mutual funds, right, we need to understand that it is for a slightly longer tenure, and I'm talking about equity mutual funds, right? So you don't really plan to
Correct.
make redemptions in the first month or let alone be the first year, right? So
Agreed.
having said that, right, this particular product allows you to get a cash flow from the very first month, right? So now not all investors are people who are in their 20s and who are investing, for the retirement, which might be 50 or at 60, right? There might be some investors who are already in their 30s, already in their 40s, and
Mm-hmm.
might not necessarily be interested towards investing for a very long tenure, right? So
Correct.
for them, especially knowing that they have that kind of corpus, right? This particular product allows them to make a cash flow, right? So I can again give you an example of some of my investors, right? They are in their mid 50s right now, right? So when they are investing and when they get a cash flow, right? Subconsciously they are feeling like they're already being rewarded for their investments, right? That also
Agreed.
encourages and motivates them to invest more. right? So
Correct.
people talk about passive income, right? So this is a very good example of passive income. Getting regular cash flow in a tax efficient manner, right, is the key, because you
Yeah.
can obviously you will also hear people talk about SWP, right? Systematic withdrawal plan, right?
Withdrawal plans. Yeah.
Yeah. So that is something which you can do with mutual funds. But when can you start this? When you have a big corpus, right? If I start
Correct.
only with like a 5 lakh and I want to withdraw, 50,000 every month or 5,000 every month, in the next 10 to 20 months, my principal is liquidated, right? I will not have anything
Correct.
left after, right? So that SWP works only when you have slightly a bigger corpus, or you've invested for, let's say, 10 to 15 years for you to now withdraw, right? But for
Correct.
those who are looking to start, or who are looking for like a regular income on a monthly basis, right? Then a structured project like this really, helps them out.
Correct. And since like you are already dealing with a lot of different investment opportunities, such as REITs as well,
Yeah,
so how do you compare a structured real estate investment like Ashton Gray
yeah,
to, something similar to that in like the investment space, like as of REITs?
right. So, REITs, for those who might not be aware, REIT stands for Real Estate Investment Trust, right? And it's not very new. REITs has been there for at least 2 to 3 decades, right? People have been investing in REITs, right? But now, what you will see is that REITs are getting more structured in India, right? For people who used to invest 30 lakhs in the past, right? Now they have the option to even invest in as much as 1 lakh rupees in REITs, right? That is the base amount set for REITs. Also, there have been some development wherein REITs are going to be taxed as per equity, which is again a positive win, right? For anyone who was considering to invest in real estate investment trust. Now, about your question, right? About how different are REITs with an AGI. I'm not going to go very technical, right? Because if you have to do a comparison, right, there are multiple factors that we will be talking about, right? But when I'm trying to make someone understand about AGI, right, actually tell them that it is very similar to what we are doing with REITs in India, right? Ultimately, what you want to do is you want to have a commercial space, right? Now, I'll again give my example, right? I'm in no situation to kind of invest, say, 1 or 2 CR in a commercial space, right? Probably my bandwidth might be a 25 or a 50 lakhs right now, right? So what REITs or any other structured product helps us over here is they help you invest a portion or a unit of that commercial space, right? Trying to make it look more affordable, right? And earn investments
Correct.
or earn returns on the amount or the unit that you've invested. So very honestly, I don't see much of a difference between REITs and AJ. Obviously, the structure is different in terms of how the investment goes through an LLP, and how we take the money from here into US and how the returns are coming as well, right? Those are different. But the
Correct.
ultimate goal is that you're owning a piece or you're owning a unit of a commercial space.
Agreed. And so, like, since we have spoken about multiple investment options, and you have also given us a lot of insights upon, the red flags to check, or the
Yeah.
tenuity and everything. So, like after viewing all of it, where do you think this structured investment of AGI would ideally fit in an investor's portfolio? Like, which
Right.
stage should AGI be considered? Yeah.
Right. So usually, and I'm going to share my screen for this. So we have something prepared called as the financial planning pyramid. So let me just share my screen over here. This is something which I always keep handy. Uh, yeah, let me just share my screen 1 second. Okay, okay. Could you let me know if you guys are able to view my screen?
Yes,
Okay.
is it's visible.
Right, perfect, right? So this is what we call financial planning pyramid, right? And over here, your approach is always going to be bottom to top approach, right? It's like constructing a house, as simple as building a house, right? When you're building a house, the most important thing is your base, either your basement or your how solid your framework is, right? So over here, when we talk about financial planning pyramid, right, your base is insurance, right? So every individual, we suggest them that it is mandatory for you to have a health insurance policy. Like now, obviously, people will say that I have a corporate insurance, etc., etc. But corporate insurance is not going to be of help for them after they retire, right? So they most definitely need to have a health insurance policy. No one can say they don't need one, right? Then comes life insurance. Again, this is not compulsory. This is only for people who have dependents who are financially dependent on them, right? So insurance forms that particular base. Then comes your emergency, right? As the name suggests, this is for your emergency purposes alone, right? You cannot plan your emergency, so you need to have certain amount of money. Again, there is math and logic behind the goal that we arrive to this as well, but this is a money that you need to have for a rainy day, right? Then comes your retirement, which, as we discussed, is going to be slightly a longer tenure, right? Like you're not going to retire tomorrow. You know that you will work at least until 55, 60 years, until you are, until you reach that age, you're going to work, right? So I feel AGI like product, right, fits very well somewhere in between a retirement and a general goal as well, right? Now, let me explain what general is in a very short and a very brief manner, right? So the reason I call it as general is because every individual has a unique goal, right? My short-term goal could be to go on a vacation, right? Whereas Miss Vanchika, your short-term goal could be to purchase a car, right? Or someone could have a short-term goal to even buy a house, right? So we call this general, right? Without naming that particular goal for them. So when you have a goal which is slightly from a short or a medium term perspective, right? I feel this particular product fits in really well in that particular category. Excuse me. Right. So I would suggest that, when you're looking at a retirement goal as well, right? Your initial investment needs to be in a mutual fund like a product where, you can invest for 15 years or more, where the compounding will happen. But you can have a small allocation in retirement as well. And if you like, you can always create a short or a medium term goal for your in your general bucket and invest this particular product.
Correct. Very well said. I think it's extremely important to kind of like, decide which step or stage an investor is usually in. So then accordingly they can act, okay, this is what is important and this is what is something that I can keep for, let's say, so like a longer time. Because I feel like investments these days are like, your money should make your own money. Like if you
Right.
have at some point in your life you have to be at a stage where your money is making more money for you, because
Right.
otherwise obviously investments and everything that we are speaking about does not make sense, right?
Right.
So I think it's extremely important for people to kind of like also understand that which stage they are in and
Yeah.
what goals they have when it comes to investment and
True.
financial planning as well.
True. True.
Yeah.
Yeah. So we do
And
talk about inflation. I'm sorry to cut you off, but we do talk about inflation, right? And we mentioned that inflation numbers are low. But if you look at some of the inflation, such as medical inflation or education inflation, right, it's actually at a
mhm,
very high percentage. Right? Medical inflation is somewhere
correct,
at 15%, right? So is education, which is close to 8 to 10% every year, right? So if
correct,
you are going to be a conservative, if you're going to be conservative with your investments, right? And I'm not saying the entire investment, but if you're going to be conservative, saying that, I'm going to just invest in an FD, right? Then it's going to
hmm
be very difficult for you to even meet inflation. Forget beating them.
correct.
Yeah,
Correct. Obviously, because if let's say year by year inflation on an average, if we count at like let's say 9-10%,
sure.
and your FD is giving you a return of 7-8%, which is what banks do these days.
True.
Obviously, that interest that you're getting is not something that's kind of like again money making money.
Right.
So definitely your percentage that you're getting as returns has to be higher than what at least inflation is. At least it has to
Right.
match the
Match inflation.
percentage of that.
Correct. Correct. True.
Correct. And so coming to the last question that I
Yeah.
wanted to ask you before we can move to the Q&A section, and
Sure.
everyone who has joined kindly post your questions in the question and answer. We have already given a chat box so that we can take it post this session. So Mr. Kadir, how has your experience with AGI been, both from an investor standpoint of view and a wealth advisor standpoint of view as well?
Right. So I'll start with my experience as a investor, right? I think I've used my example in the past as well that, when you're in your 30s or when you're in your 40s, right? You don't want to commit yourself to a very big project, and then all your decisions are revolving around that. Say, for example, if I've taken a big loan, and especially when it comes to real estate, right? Your loan tenure is slightly higher, right? Is slightly bigger, right? In terms of 15 to 20 years, right? And then you make all your decisions based around that, right? So for an individual to commit to such a big investment might not be the most ideal thing for them, right? So for me, AGI was an opportunity to invest in real estate, right? With the resources that I had, right? And it was a good experience as
True.
well, because I am not one person. I'm not that kind of a person who goes, scouting for projects to see, if I can invest right now and then, flip it over, right? I believe in a growth strategy, and which is why I found this to be a very good investment for my short-term returns, and at the same time to build that kind of stability in terms of knowing that, this is the percentage of return that I can make, and this is the exit that I can time. So from that particular perspective, I found this product to be a very good fit. Now, from a channel partner's perspective, as I mentioned, I feel it's just been 2 years, right? And there's going to be definitely a long partnership ahead. But it's been a very smooth process, right? Initially, like when I heard about AGI, probably and I'm just being candid, right? I didn't think
Again,
that it was the right fit for some of my clients, right? But after going through a cycle of 2024 and 2025, right? I definitely encourage a lot of my investors who I felt were fit to, invest in that particular product. And I did suggest and I did recommend them about this particular product as well. So they've had a very positive experience as well. But more than anything, right, I feel it's the learning, right? There are going to be a lot of projects, there are going to be a lot of products which are going to come, right? So one has to be relevant, one has to understand the risk, has to take calculated risk as well, right? Because the last thing that you want to do is that, you want to fear that, okay, you missed out on something, and also not invest just because you're going to miss out, right? You need to be taking that well informed decision as well. So I honestly feel that, if I were to recommend this particular product, right, I should also have
correct.
stake in that particular investment.
Agreed. And I think which is something that, a lot of our investors have done, like the testament that, you are also taking a webinar today means
Yeah,
that you've had a great experience with us.
true.
So thank you so much for your insights.